Hello and welcome. Let's discuss how to open a mega backdoor Roth solo 401k at Schwab. Thank you so much for joining. If you're here live on YouTube or one of the other platforms like LinkedIn, please feel free to chat over questions as we love to discuss these topics. And if you've got a question, it's very likely that others have the same question. So it's going to be a great question. So as always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So if you subscribe on YouTube, you get notifications when we go live. We go live twice per day. So you can join the live session, come ask questions. You can see the content later in the library. So for example, you can see that right now, of course, we're here to discuss how to open mega backdoor Roth solo 401k accounts at Schwab. Tomorrow, though, we'll be here in the morning session to discuss how the pro rata rule doesn't apply to mega backdoor Roth solo 401k plans. In the afternoon session at 1 p.m. Pacific, 4 p.m. Eastern, we'll be here to discuss how to add a spouse to your solo 401k. So these are some of the very common topics that we're discussing every day with our customers. But let's get into it. So another reason to subscribe is that you get access to our deep dive content. For example, the plan is on Friday to discuss the magic number of how much income you'll need to be able to maximize contributions. Specifically on Friday, we'll be focused on businesses that are taxed as an S Corp. And then we'll be having additional sessions for other business types like sole proprietorships, partnerships, etc. Before we get into the good content of how to open mega backdoor Roth solo 401k accounts at Schwab, let's first lay the foundation with solo 401k eligibility. So a solo 401k is a 401k that's for a self-employed individual, an owner-only business. So in order to be eligible, you need to be self-employed and have no non-owner, non-spouse, full-time W-2 employees working for any business owned by you or a spouse, if any. So think like an independent contractor, a solo practicing professional, whether it's a CPA or an attorney, could be a medical professional, a realtor. The key is that you're reporting earned self-employment income on your taxes. Now, you don't need to have a formal legal entity like an LLC or an S Corp to be eligible. Many of our customers operate as sole proprietors without a formal legal entity, which is totally fine. Ultimately, you just need to report earned self-employment income on your taxes. So earned self-employment income for a business that's taxed as a sole proprietorship is income reported on Schedule C of your 1040. Whereas earned self-employment income for a business that's taxed as an S Corp is going to be W-2 wages from that S Corp. There's no minimum amount of earned self-employment income that one needs in order to be eligible to set up a plan. In other words, it's not just for larger self-employed businesses. Even micro self-employed businesses would be eligible to set up a solo 401k. In addition, a spouse or business partner may participate in the solo 401k as long as the spouse or business partner are reporting their own earned self-employment income. You could set up a solo 401k even if you have a W-2 job, even if you participate in your W-2 employer-sponsored plan. Again, the key is that you got that separate earned self-employment income to be eligible. Now, one of the top reasons that customers will set up accounts with us is because they can make mega backdoor Roth contributions to our solo 401k plan. So with a mega backdoor Roth contribution, individuals are going to be able to contribute up to $69,000 or even $76,500 if they're 50 or older for 2024. And then for 2025, the limit increases to $70,000 or $77,500 if they're age 50 or older, or $81,250 if they're age 60 to 63. And like any Roth account, the benefit is that you've got that potential for tax-free growth. So how do you set up a mega backdoor Roth solo 401k? Well, you first have to be eligible. We just talked about that eligibility requirement of being self-employed with no full-time W-2 employees. And then number two, you need to find a provider like us that offers a plan that allows for voluntary after-tax contributions and then in-service distributions. So when you make a mega backdoor Roth contribution, it's a two-step process. You first deposit the voluntary after-tax funds into a voluntary after-tax account before they're moved over to either a Roth solo 401k or Roth IRA. So that's either the conversion or the rollover. And then you want to work not only with a provider that offers a plan that allows you to do so, but the one that's has a lot of experience and provides a lot of ongoing compliance support. For example, we assist our customers with establishing the required accounts, right? Pre-tax, Roth, and voluntary after-tax. We provide the ongoing compliance support. So for example, as an optional free service, in other words, no additional charge, we prepare the 1099-R that has to be issued. When you move the money from the after-tax account to that Roth account, that second step is reportable on a 1099-R. So as long as customers just provide us the information in a timely fashion, we prepare that 1099-R as an optional free service. In other words, no additional charge. So we are totally neutral as far as where the account is opened. We help our customers, though we're very hands-on though in helping our customers open up accounts at the bank or brokerage of choice. One of the top brokerage options is Schwab. So Schwab will open up free brokerage accounts that are governed by third-party plans. So Schwab offers their own basic solo 401k plan, but it doesn't support mega backdoor Roth contributions. But at the same time, Schwab is happy to open up free brokerage accounts for third-party plans. So the way that I think about it is that a 401k is really a legal entity because it's a trust. So like any legal entity, what creates it are the documents. So we have IRS approved documents that will allow the individual to make the mega backdoor Roth contributions. So individuals can use our documents to open up accounts at Schwab. And we're very hands-on. We pre-fill the paperwork that Schwab requires to open up the requisite accounts. So the steps would be to first open up a voluntary after-tax account for the solo 401k, make the voluntary after-tax contribution, then move the money to either a Roth solo 401k. So we might be helping you open up a second or even third account for your solo 401k if you have pre-tax Roth and after-tax funds. So either move those after-tax funds to a Roth solo 401k or move those after-tax funds to a Roth IRA. Could be a Roth IRA that's already at Schwab, right? A pre-existing Roth IRA. Or it could be a Roth IRA at another institution, or it could be a new Roth IRA. So even though that first step of making those voluntary after-tax contributions is not reportable, that second step of moving the money to the Roth account, that is reportable on the 1099-R. So customers just use our online form. They can submit the information 24/7 at mysolo401k.net/forums. It'll redirect you to the page where we have our different forms. So there'll be one form if you're moving the money to a Roth solo 401k, a different form if you're moving those voluntary after-tax funds to a Roth IRA. So here's some good visuals that just show the different account setups. You might have pre-tax, Roth, after-tax, one participant, each opened up under the name of the solo 401k. If there's two participants, there might be 6 accounts, right? Pre-tax, Roth, and after-tax for each. If you're moving the money out of the solo 401k to a Roth IRA, there might just be 2 or even 1, right? If it's just voluntary after-tax funds. So let's handle some of these questions. Thank you so much for bringing the questions, and then we'll come back to some of the content. I know we don't need an LLC to buy real estate with our solo 401k. Is there any benefit to buying with an LLC, such as a lawsuit can go after the entire plan's assets? So I would say that you're absolutely correct that it's not necessary to have an LLC to buy real estate. Many of our customers just simply who are investing in real estate. That's one of the top reasons they set up accounts with us. They'll just buy the real estate directly in the name of the solo 401k. But a reason they might want to have that real estate inside an LLC that's owned by their solo 401k is to protect other assets that are in the solo 401k. So let's say they have a brokerage account with $50,000 and then they have a rental property for $100,000. If they want to contain any liability that arises with respect to that rental property, they may put that rental property into an LLC that's owned by their solo 401k, and that'll give a measure of protection with respect to the unrelated brokerage investments, like the mutual funds, let's say. We have a page on our website where we talk about investing in an LLC, your solo 401k in an LLC. So let me just pull that up and chat that over. Feel free to grab that. Thank you so much for bringing the good question. Absolutely. Thank you for reaching out. So we'll send you an email with a link to our calendar. Please. Thank you so much for joining. And then you can just pick a time that works for you. So we do it as an optional free service for our customers. We charge $800 and then pass on the cost that the state charges to set up the LLC. Good question. Just going to make note of that email so we can send a link to the calendar when we're done. Thanks again for joining. Well, so one of the questions, so back to the topic of the mega backdoor Roth, how to open a mega backdoor Roth solo 401k. You know, we've talked about how it's a two-step process where an after-tax account would be set up at Schwab. So a brokerage account would be set up at Schwab in the name of the solo 401k for after-tax funds. And then those after-tax funds could either be moved to another brokerage account at Schwab set up under the name of the plan for Roth solo 401k funds, so an in-plan conversion, or those funds could be transferred out of the solo 401k to a Roth IRA. So that brings up, okay, should I convert to Roth IRA or should I transfer to Roth solo 401k? Well, it depends, right? Some individuals may have a Roth IRA where they're satisfied with that performance, right? And they just want to continue to accumulate funds in that Roth IRA account to grow that account balance. So those individuals may want to transfer those voluntary after-tax solo 401k funds out of the plan to that Roth IRA. Whereas others may want to keep the money in the Roth solo 401k to take advantage of the investment options with respect to that Roth solo 401k. So for example, for those that want to invest in alternative investments, our plan not only allows for mega backdoor Roth solo 401k contributions, but it also allows for investing in alternative investments like crypto, like real estate, like private placements, etc. So keeping the money in the plan will still keep that investment option available with respect to those funds. Another feature of our plan is the ability to take a 401k participant loan. This is where the solo 401k participant can withdraw money from their solo 401k and use that for any purpose. It's not going to be considered subject to taxes or penalties as long as it's properly documented as a loan, which we handle that loan documentation requirement as an optional free service for our customers, as well as paid back according to that loan payment schedule. So it needs to be paid back in either monthly or quarterly payments, equal payments of principal and interest. The interest is prime plus 1%, with those payments spread over a 5-year term. More on those that want to invest in alternative investments. So there is a special advantage of Roth solo 401ks versus Roth IRAs for those that are looking to invest in real estate using debt, right, to leverage their investment. So it is possible to use one's retirement money along with a special type of debt called non-recourse financing to invest in real estate. So that's essentially a mortgage. It has to be non-recourse financing, which means that the only recourse of the lender is to go after the underlying property itself, right? The collateral. In other words, the lender can't go after the retirement account. It has to be non-recourse. If one uses their Roth IRA funds to invest in real estate and do it on a debt finance basis, in other words, using non-recourse financing to invest their Roth IRA funds in real estate, the income attributable to that investment will be subject to a special tax payable by the Roth IRA called unrelated debt finance income tax, or UDFI. However, there's an exception to that UDFI tax with respect to income that flows from a debt finance real estate investment that's held inside of a solo 401k. So for those who are looking to make debt finance real estate investments, investing via a Roth solo 401k as opposed to a Roth IRA presents a tremendous advantage. In terms of required minimum distributions, there used to be a difference because previously one had to take required minimum distributions from a Roth solo 401k, but that no longer applies starting in 2024. So that has been equalized. So there's no difference there. The ability to withdraw funds from a Roth IRA is more permissive in the sense that in order to withdraw funds from a Roth solo 401k, you have to meet a triggering event. For example, being age 59 and a half or older. And then if you withdraw the funds as a non-qualified Roth distribution from the Roth solo 401k because you haven't had those funds, you haven't had the account for at least 5 years, and you're not at least age 59 and a half or older, then one will need to pay taxes on the portion of the distribution that is gains. So you have to take a proportionate amount, a pro rata amount of the contributions or the basis, as well as the gains when you take an early distribution from your Roth solo 401k, and then pay taxes on the gains portion. Whereas the withdrawal rules for a Roth IRA would allow someone to withdraw the contributions, then the conversions before they're forced to take out the gains if they take an early distribution. You don't have to meet a triggering event before you can start taking money out of your Roth IRA. So those are some of the top considerations for those that are trying to decide whether to convert those voluntary after-tax solo 401k funds to a Roth IRA or a Roth solo 401k. All right, so let's field some more questions, and then we'll keep going with some of the content here in the slides, talking about the deadline to make contributions. We've already converted from our traditional to our Roth this year. May we convert more later this year? That's a great question. I'm assuming we're talking about converting from a traditional solo 401k to a Roth solo 401k. One second here. All right. So we just answered this question with our AI. So just wanted to highlight one of the resources here. We've got the industry's first AI. If you go to solo401k.ai, it's a great way to answer questions quickly and find resources. So we put your good question into the AI. We've already converted from a traditional 401k to a Roth solo 401k. Can we convert more later this year? It says, yes, you can convert more funds from a traditional 401k to a Roth solo 401k later this year. There's no limit on the number of conversions you can make. So that's a good answer. So because it's correct, you can convert as much or as little as you want from the pre-tax solo 401k to a Roth solo 401k. Of course, it's going to be taxable for the year of the transfer. It's going to be reportable. Customers, we prepare the required reporting as an optional free service for our customers. They just have to let us know. They just go to mysolo401k.net/forms to submit the applicable form to give us the information we need to prepare the 1099-R. No, questions are not limited to the topic. We just like to bring a popular topic, but please feel free to chat over more questions. We're happy to field the questions. We appreciate the chance to discuss. We've got about almost 10 more minutes, so please feel free to chat over more questions. While you're teeing up your question, let's talk about the deadline to make contributions. So there is a deadline to make voluntary after-tax contributions, which is the first step of making mega backdoor Roth solo 401k contributions. Could be at Schwab, could be at Fidelity, could be at a bank, etc. So that's the first step. But yes, and there is a deadline to make contributions. And we'll talk about the deadline in a second. But there is a second step when you make that mega backdoor Roth contribution, when you move the funds from the after-tax account to the Roth account. There is no deadline to move the money from the after-tax account to the Roth account, whether it's a Roth 401k or Roth IRA. The first step is not reportable. One doesn't need to report after-tax solo 401k contributions on their personal or business tax return. The second step, when you move the money from the after-tax account to either a Roth solo 401k or Roth IRA, is reportable on a 1099-R, but it's for the year of the transfer. So as you'll see, when we talk about the specific deadlines, a lot of times people are making solo 401k contributions for the prior year. Like, for example, many individuals are making 2024 contributions now here in 2025, which necessarily means that the money won't be transferred from the after-tax account to the Roth account until 2025. So that after-tax to Roth transfer will be reportable on a 2025 1099-R, even though the money wasn't made as a 2024 contribution. So with that in mind, let's talk about the deadline. So for all business types, for those that signed up with us before the end of last year, so December 31st, 2024, or if you had a pre-existing solo 401k somewhere else, like a basic solo 401k, so you had established a solo 401k somewhere else, that individual would have preserved the ability to make all types of 2024 contributions, whether employee, employer, or voluntary after-tax, by their business tax return deadline, including extension here in 2025. Now, if you didn't sign up with us before the end of last year, or you hadn't set up, say, a basic solo 401k plan somewhere else that now you want to upgrade the R plan to take advantage of the service and features of our plan, then you can still set up a plan for 2024 and make 2024 contributions, but you'll be more limited in either the types of contributions you can make or the deadline by which you have to make those contributions. And it'll depend on how your business is taxed. So we'll go through it for each business tax type. So for a sole proprietor who didn't sign up with us before the end of last year, or he hadn't set up a basic solo 401k plan somewhere else before the end of last year that they want to now upgrade to our plan, they could still set up a plan here in 2025 and make all types of contributions, employee, employer, and voluntary after tax, but they would have to set up the plan in time to make at least the employee contributions by April 15th. Otherwise, they could set up a plan and make employer or voluntary after-tax contributions by October 15th if they filed a timely extension for their business tax return. In other words, if they filed a timely extension for their 1040. Now, for all the other business types, partnership, S Corp, C Corp, if you hadn't signed up with us before the end of last year, or you didn't have a basic plan set up somewhere else before the end of last year, then it's too late to make employee contributions for 2024, but there's still time to set up a plan and make either employer or voluntary after tax, which is how you make mega backdoor Roth contributions. As long as you set up the plan in time to make those contributions by your 2024 business tax return deadline, including extension. So March 17th or September 15th, if your business is taxed as a partnership or an S Corp, or April 15th or October 15th, if your business is taxed as a C Corp. All right. So again, please follow the conversation on our community, mysolo401k.net/my community. We have over 30,000 members. We have vibrant forums. Again, please feel free to join our webinars. It's totally free to join. All are welcome. You don't have to be a customer. Just come to mysolo401k.net/webinar to find the schedule, or you can easily just go to YouTube and subscribe, as you'll get the notifications. We go live twice a day, once at 10 a.m. Pacific, 1 p.m. Eastern, and then we're back again in the afternoon at 1 p.m. Pacific, 4 p.m. Eastern. All right, let's go to some of the good questions here. Okay, thank you so much for joining. Thank you for bringing the good questions. It sounds like the self-employed individual or a related entity will at least be part of the borrowers. And no, it sounds like the loan would be from the self-employed person to the solo 401k, or they would be secured by the solo 401k properties. So that would not be allowed. Oh, you're saying we are not the ones lending the money. I see. Well, okay, so you're not the ones lending the money, but the self-employed person is going to be getting a loan origination fee. So no, that's not allowed. The self-employed person cannot benefit from the solo 401k personally, cannot receive a loan origination fee for a loan that's made to their solo 401k plan. My company changed, thank you for that great question. My company changed structure from sole prop to an S Corp in 2023. I read your article stating this is allowed. I just need to update the plan documents to note the sponsor change. The other wrinkle, that is correct. The other wrinkle is that I contributed $22,000 to the plan at the end of 2024 from my W-2 wages, and my payroll provider didn't note that on my W-2. If I get them to update the W-2 to note the contributions and update the plan, am I missing anything else? No. So that would be updating the W-2, updating the plan. I agree. In terms of the contributions and the issues presented. No, there's no requirement for the solo 401k contributions to be made through the payroll provider. It's totally acceptable for the solo 401k contributions to be made either from the personal account or the business account. That's acceptable from a solo 401k perspective. Now, some accountants, based on client feedback and experience, will express their preference from an accounting perspective that employee contributions come from the personal account and employer contributions come from the business account, but we can't say that that's required from a solo 401k perspective. Well, wonderful. Please like this video if you found it helpful. On YouTube, it helps us get the word out. Please subscribe on YouTube so you can get the notifications. Thank you so much for the great participation. Until next time.